Hey everybody, Tom Gentile. Welcome to our live trade Wednesday, the 29th. Glad to have you all here. Everybody's piling in right now. We're awaiting word from the Fed, but that's going to come. That's definitely going to come, and we'll see where it ends up taking the markets. We have I think a fantastic webinar for you today, live stream today. We'll be going through trades. I'll talk about yesterday's trades. I want to talk about SPY, GLD, Google. I want to talk about McDonald's, and also I'm kind of teeing up looking at Boeing and Facebook today. And my eyes are on Walmart and the move down that it had this morning. Just kind of looking at it, and I'm looking at it as a longer term play. But yeah, tons of stuff to talk about today. We are going to get into cryptocurrency too, and I've got an announcement to make to everybody. I'm going to do a pre-announcement today, but the big thing happens tomorrow, so I'm going to kind of tease you a little bit today on something that we're going to be talking about tomorrow. So session's being recorded. I'll have the recording out to you as soon as possible once we're done, so you can listen to it again if you're live, and you can listen to it for the first time if you're getting it. Also, questions, if you're live, put them in the Q&A box, and we'll try to answer as many as we can. And then finally, the disclaimer on the screen. So you can read this in its entirety on the recording. I'm going to mention two things real quick. Number one, stock and options trading has large potential rewards, but also large potential risk. Number two, myself, Jay Harris, everyone associated with Optionetics and Tom's Trading Room, we are here as educators to show you what it is that we do in trading. We are not investment advisors. We do not give specific trading advice. And everything I'm going to talk about is in US dollars unless noted otherwise. So welcome back once again to all of our students. Glad to have you here. This is day 3 of a 4-day workshop that we're doing. I'm going to let you know that tomorrow's workshop is going to be going out to just those of you who registered for this program. It will not be made available to everybody because I'm going to be doing something very special tomorrow, and I can't do it for everybody anyway. So, but for those of you that are here, we do a lot of education and reports right there at tomgentile.com and optionetics.com. Of course, you could subscribe to our YouTube channel. That's youtube.com/Tom's Trading Room. And of course, our option tools, which is platinum on steroids, starting at $79 a month. All right. For today, so if you're just joining us, on Monday, we did our COVID-19 strategy. We talked about stock selection. We mentioned calls and puts. And yes, we did case studies. I did something called case studies yes and case studies no. On Tuesday, that was yesterday, we did a review. We did spread trading. We talked about Darknet, money counter, and trading the burger wars. All right, both of those are available. And I sent the recordings out immediately following the live broadcast. We'll do the same today. Today's going to be a review. We're going to talk about trading cryptocurrencies, okay? And I'm making a slight change to tomorrow. I want to do something called the triple threat trader, one of the best trading strategies going, not just in the last month, but I'm going to show you tomorrow how to build, back test, and trade this strategy. And I'm going to show you back tested results that are quite good. All right, so we're going to talk about that as well. So let's go ahead and let me look around here, see where I am. Let's go ahead and get started. We're going to talk about I don't want to go into a big outlook on stocks, bonds, currencies, commodities, but I want to look at the intraday numbers on that. Okay, and then I'm going to go back and I'm going to talk about yesterday's trades. I have a good and bad news on one of them, and we'll talk about that too. Of course, we'll tee up for today as well. So that's my plan for the next few minutes. All right, so let's slide over here. Here we go. Okay, so this is the S&P 500, and yesterday, and I'm going to show this. I'm going to show this here in a few minutes. Yesterday, I actually in class one of the things I did was I bought some puts. I showed a short-term day trade using a pattern called the money clock. All right, and I had a money clock bull on GLD, and I had a money clock bear on the SPY. And so I'll show you how both of those turned out, but you can tell by here because I actually ended up getting out right near the close. And so buying that put worked out very nicely. And that was a put option with only 2 days to expiration. But let's talk about today. What happened between down here and up here? Well, Google reported. And when Google reported, and they reported okay numbers, their sales and revenue slipped beyond what the revised estimates were. But they held in okay on their earnings. And I say okay, and apparently just okay was good enough for the stock market today because everything jumped, especially social media. We'll take a look at Google in just a moment. But market jumped, and we had our opening hour high and low, as you can see here for SPY. Opening hour low is 290.41. Opening hour high was 292.10. We already hit a target on the bull this morning up here near 294 even. And now we're kind of coming back down, and I believe that it's going to get very sloppy here with the Fed reporting. And so we got Fed reporting, and then we've got Fed is going to, I guess, make a speech about this at 2:30. But as you can see, the markets are kind of pulling back just slightly, still up huge today. But I think the volatility risk is to the downside, okay? Because we've had a lot of movement to the upside in recent days. So I think we're going to have a good washout day or two here coming very, very soon. And I've been preparing myself for this day for a while now. But is it going to come, or is it going to be put on hold? Well, we're going to find out here very soon. All right, so this is SPY. Let's see what the rest of the market is telling us as far as what's happening today. So TLT. Now, TLT, interestingly enough, if you look at what happened to it, we actually had TLT moving in inside the range this morning while the S&P was breaking out. If TLT goes down below this range, it's basically confirming the move in the market. All right, it's confirming that move. Now, that's exactly what ended up happening after 1 o'clock. We actually came down and confirmed off of going back and forth on this line here. All right, we saw that happening. And of course, we had a little bit of a pullback, but a big drop down to 168.76. Right, this is very close to our target low. Now, in the last 5 minutes or so, we had a spike back up, and now we have a spike back down. Again, this is all being caused by the Fed decision today. Now, Fed decision today is one of the reasons why I kind of pull back from trading these trends, these short-term trends. I don't trade short-term on Fed decision days, and I don't trade short-term on the first Friday of every month. And the reason why is because that's the day we get the big labor statistics, the 3-in-1 report. So any of you that are short-term traders, now you got ideas for me of when I don't trade, all right, because it's just too volatile of a day to jump in front of. UUP, this is the double dollar index, and it has, for the first time in a while, dipped below the $27 level and stayed below it, and we're below it right now, but only by a couple of ticks. We'll see where we end up here as we get into the last 2 hours of the trading day. Not really a whole lot to talk about here. This is a big Goldilocks day today for UUP. USO, well, it was having a fantastic day. It still is. I mean, it's up 4.8% on the day. But if you look and see what's going on with USO, notice that everything got reversed. All right, so this has all been split adjusted. So if you woke up this morning and yesterday you went long USO at $2 and change, and all of a sudden you woke up and you see it up at 17.85, don't get too excited, because this is a reverse split. and a reverse split happens, when something in the case of a managed fund like an ETF, if it gets so low that it could come to a point where managers will start to make some decisions on it. One of the first decisions they make to save these ETFs is to reverse split it, take shares out of the market, and reprice the stock, all right, or in this case, the ETF. Typically, when we hear about splits, we hear about 2-for-1 stock splits, 3-for-1 stock splits, where you'll take a $50 stock, it'll drop to $25, but then there's twice as many shares out there in the marketplace. This is the reverse. This went from $2 and change up to that, now we're in the high 17s, because this was an 8-for-1 reverse split. That means for every 8 shares of USO that you owned, you now received 1 share that's worth 8 times the price. So it's kind of like swapping, all right, changing out and coloring up, or changing out 4 quarters for $1, or etc. It's still worth the same as it was yesterday. The difference is you might have less of it at a higher price. Okay, so that's USO. Let's talk about some stocks in question. Let's go ahead and get right to Google. Let's get the elephant in the room out of here. Here's Google. So this is Google on the low. We were talking about Google yesterday when it was trading at 1245. All right. And then here we are, we're in the 3 o'clock range, and we get this drop down. Now, I was looking at a couple of different scenarios with Google. Right? I was looking at call spreads that were $500 in cost, and even you can even look at ones that were more expensive or ones that are cheaper. And as, I don't know if you want to call it luck, as inefficiencies, how about that? As inefficiencies would have it, I couldn't get filled on a call spread yesterday, because as we were getting closer to the close, the lack of buyers and sellers in Google widened the bid-ask spread so wide, I didn't get filled. And I'm looking at it now, and glad I didn't get filled, because look what happened here. Boom, get this big move up. This will happen sometimes. I expect, for instance, I'm looking at Facebook today. That's actually got some pretty good efficiencies. We'll take a look at it in a moment. But Amazon's another one of those stocks where even if you find something you want to do in the options, the bids and offers have been wider than normal, and it does not create good trades, in so much that your spread, the difference between the bid and the offer, can be sometimes too wide to even create a low risk trade. That was the case for me yesterday with Google. Couldn't do it. All right. So as you can see, Google had the big move up. Google's been kind of sitting in this range here right now. Now, on a good note, I really like the gap that has been created on Google between the 12, the area we were in yesterday and where we are today. There's a nice little gap there that if Google does trade down below this low that we have today, I think this is going to be a nice shorting opportunity. The other thing I'm going to mention is, because it's going to come up, one or more of you in the room are going to say, but Tom, what about the inefficiencies you had yesterday? Aren't they going to be there today? No, not as much, because volatility has now been crushed in Google. And when the crushing comes in volatility, guess what? Bids and offers come back together. So that's important to know as well. So I'll be keeping my eye on this one and seeing if we do drop down below 1326.73, then I'm going to be very interested in a bearish opportunity below that. All right, going into May, looking at maybe the May options that expire on the 15th, or even farther out from there. But we'll see. We still got quite a bit of room before that could or could not happen. All right, so that's Google. Now let me put up a couple of other things. Oh, you know what? Let's look at a long-term trade. So yesterday I was talking about the Burger Wars, MCD, McDonald's. That's up actually pretty nicely off of yesterday's close. Yesterday's close, you can see here at around just below 186. We were talking about 185 and paying $18,500 for 100 shares of stock, or creating a long-term spread on this one between 190 and 200. And as you can see, we were actually trading above 190 just an hour and a half, 2 hours ago. Now we pulled back a little bit, but as you can see, this one's and we were looking at long term on this one. We're talking about options that were going back as far, all the way into January 2021, buying the lower, selling the higher. Now let's take a look at that and see how that has performed today. So I'm going to go to options, and I'm going to go to option chains, and I'm going to go to MCD, and I want to put in 10%. This takes me 10% above and below the current price. Let's just click update. And then you can see here that I'm looking at option expiration months. Okay, here's May with 2 days to go. I don't want that one. What I want is Jan 15, the ones we looked at yesterday. Okay, I'm going to come up here and I'm going to go ahead and click on update. All right, let me bring up my, see if I can toggle this thing on. There we go. So, so I've gone through, I'm looking at McDonald's, I'm looking at the Jan 15, which there are 36 different strike prices up and down on this one. We're just going to look at the ones that are close to the money. So here is the 190, below this up, the 190 calls and the 200 calls. And yesterday we were looking at this, and this was actually trading for less than $500. Let's see where it is today. All right, has it moved that much? Is it now no longer attainable? Let's take a look and see. Actually, looks pretty good. It's gone from I think $455 was the spread price yesterday. Why has it only gone up $20, Tom, when the rest of the market, when McDonald's itself is up $3 today? Why did this only go up 20 cents on the option? That's because we're talking about something that expires in January 15th, 2021. It's not going to move as much. The gamma just simply isn't there, okay, to push this thing out. And the options are not going to change that much since they have so much time value built up into them already. So this is still out there and something that that I'm going to keep my eyes on. Right, so that's McDonald's. Now let's talk about those two quick trades that we were looking at yesterday. And for those, I'm actually going to take the screen and I'm going to split it. I'm going to come up here in this area. I'm going to open this up and I'm going to make a double split screen. So on the left-hand side, we're going to put in SPY. And here's the SPY. This is today, by the way. Today I'm not going to concern myself with right now. I want to show you yesterday. All right, here was 2 o'clock. This is the area that I was getting short in on this one. But if you can remember, here is the put option. It was .SPY, and then we were looking at the 29th. The options expired today. All right, P for put. And I was actually showing you how to place a trade using the 287 puts. Now today they're only 7 cents, but I'm not interested in what they were trading at today. Yesterday is where I was more interested in where they were trading, because that's when I took the trade yesterday. So yesterday we took a trade right in here, and this was around the 2 to 2:15 time zone, and I took this. And I actually ended up getting out of it at 15.55. Right there is where we got out. In fact, 271 was where I got out. I got filled on these at $1.70. That was down here. In fact, I think what I ended up doing was I took that trade either at the top of 2 o'clock or around 2:30. I think it might have been around 2:30, somewhere in here. And I ended up doing what's called a contingency, a sell contingency order, where all I basically did was sell this at 3:55 p.m. So that way I wouldn't look at it. So at 3:55 p.m., these puts ran all the way up. They got as high as 285. But I sold them at 271. Nice little move there. All right, let's take a look at GLD. So GLD. As you can see, GLD, this is today's GLD, where we had a 2 o'clock spike. It's pulled back down since then, but again, yesterday was what I want to take a look at. Here was GLD. Now here's the 2 o'clock area. All right. And again, 2 o'clock, 2:30. And this is GLD. I'm going to give you the option .GLD. And I was looking at the 200501. That's the May 1st, 2020 calls with a strike price of 160 because that's where this thing was hanging out. Now, again, not looking at today. Yesterday. And yesterday I was filled on these. Again, was a order I was looking at 169. So this is where I was at around the 2 area, this area 169. And of course, here we go. It went down and it went all the way down to around 140, and then started moving higher because the market was moving lower. So 150 or 355, I get out. I got out right here, not up here. Love to have stayed in it for another minute or two, but it didn't happen. So actually in at 169 and out at 171. So what is the rules here? The more short term you are as a trader, the more disciplined you need to be as a trader. The longer term you are, with like the McDonald's example I showed you, that thing goes all the way out to 2021. I don't need to watch it like a hawk, like I need to with these short-term trades that are out there. All right. So that's kind of where I wanted to start with you guys. And we looked at for those one day trades, we were looking at puts. And again, I showed you, I got in, showed you how I placed that order. You heard the ding on the way in, and then you didn't hear the ding on the way out because we finished our webinar up yesterday. I think it was around 3:30, and of course I didn't get out until 3:55. All right, that was the timestamp on the order. But spotting the opportunity, and yesterday we used a couple of different things. We talked about Darknet, and Jay was discussing Darknet, and Jay was discussing Money Counter, and showed a couple of different ideas there. All right. And then we created a low risk trade. We showed you some case studies, again, not recommendations, just showing you how it is that I trade and how it is that we trade, with using our own accounts. And then finally, placing the order and then managing the order. And that's exactly what I ended up showing you how I did as well. So that is, again, just a quick little synopsis. What I want to do now is let's do a quick review to see if there are any Darknet strategies or if there are any money counter strategies out there. And we're not going to go into the details that we did on Monday or Tuesday, because that, if you want details, you can go back and refer to those. But Jay, are you ready for me to turn this over?
Yes, sir.
All right, awesome. So let me find you in the group of folks we have here. Boy, we got a great group today. Look at this. This is fantastic.
Really good turnout.
So let me just make you the presenter.
Okay.
And there you go.
And you should be looking at a candlestick chart over the past 60 days on the SPY in Tom's tools that is showing the Tom's auto fibs. Can you confirm that, please? Yep. Okay, good.
I see it. I have three different screens on your side to look at the right one.
Okay. Hey, Bernard. All right, so here we go. Somebody's asking about your outlook for the rest of the week. Tom, I'll let you do that, as you probably will when you wrap here. What I'm showing you is the SPY. Tom and I were talking about this morning. The market, gapping up again on the OK report from earnings for Google. And I said, well, I mean, we're bumping up or we're near the 61.8%. And we were saying, are we at it yet? And we said, not quite. We are getting close to it. And based on today's action, there's the 61.8% fib retracement. And that's taken the closing high from back in February to the closing low here in March. We are now at the 61.8%. Where it goes from here is dependent on how many people use this indicator. Like all technical indicators, guys, they work if enough people are paying attention to a specific technical indicator and trading off of that. So if we got Fibonacci traders or traders that use a multiple of other things along with Fibonacci, here's a 61.8% retracement. That may cause a stall, it may cause a rollover, or it may blow through that. So there's your, financial news network hedge. It's going to go lower unless it doesn't, all right? But we are at that 61.8%. A lot of people love fibs, use fibs. Hey, Henry, I see you there. I wanted to offer that perspective there too. If Tom mentioned it already, then this is just a review of it with another person's set of eyes on that. So we will see what happens from here, okay? So let's go back to home. Remember, I said wherever you are at in the tools, go back up to home and Tom's tools, and you go back to home base. And so here we are. We want to look at Darknet and money calendars. So to go to Darknet, you can click on the icon or go to home, Darknet signals, and bring that into play. What I do here is we leave it on all Darknet stocks. We look at the trade type displayed and put call option trades in the window and click search. Now, as a review for everybody that wasn't here yesterday or tuning in new today, Darknet looks for a bullish opportunity. This is a bullish scan. It's looking for pullbacks in price on securities to where the price is hitting a multiple trend channel support. So there's 3 different trend channels. And when you bring up a chart and you look at trend channels, you can see that the price is hitting a short-term, a medium-term, and a longer-term support. Sometimes they overlap and you can't see the colors as clear as you like because 2 of the channels are pretty parallel or pretty similar. But what we're looking for is a pullback in an uptrend, anticipating a bounce off those multiple channels stacking on top of each other and the price bouncing off that support of those channels. So if I were to show you now the list for today of all these stocks in the Darknet stock list, it's a proprietary list, and we run call option trades because if we find a stock that has a Darknet B or bullish signal, we want to see if there's an option trade available for that. The scans will also provide the option, the call option on that security with the lowest percent to double. So if we click on search for today, you're going to see that we have no candidates for today. So this, little upswing in the markets isn't providing enough of a pullback in the securities on the list to show a signal. Now you can set the days back to a number of days. You can go 5 days and see if one showed up in the past handful of days, 10 days, and so on. And if it does, it'll show you. There's OHI, Omega Healthcare. It's a Darknet bullish. There's the type B bullish stock. And there's the option. It's a June 19th, $29 call for 285. Its percent to double is 16.76. So if you click on the ticker symbol for that specific security, you will bring up the chart and you will see the Darknet B bullish signal right there. You see the last one it had prior to this signal was back on March 18th, had the Darknet bullish signal, and it accounted for a nice 10 to 12 point run there. So if you like the idea of history repeating itself, and that's what we like to do as pattern traders and rules-based traders, is take an idea that if it has a history of doing or performing a specific way, we look for it to play out that way again when it sets up, and it's setting up again for another Darknet B bullish opportunity. Now that was 5 days ago. You can go ahead and look at the current chart, and let's go ahead and go option charts. I'm sorry, stocks charts. And the stock charts, and this is on what symbol again? OHI. I almost said OIH. OHI. There it is. So there's the current chart from the past 1, 2, 3, 4, 5 trading days where we got the signal to what it's doing right now. Kind of a little bit of a sideways action right now. All right, so let's go back to Tom's tools. Let's go back to Darknet. Derek's asking, explain the delta selection range. We want the delta of the option to be greater than 40 and less than 80. If it fits between those numbers, that's why it will show up. If it's outside of those, it will not. All right, so here we are. We're going to look at something else. somebody noticed, Mark was on our call yesterday, and he noticed that when I clicked on this, you see a line item for bullish candle reversal call option trades. If you click on that and you click on search, what I've asked for, and our programmers have done an amazing job of getting this done. Tom saw what they got done, approved it being released, and it was released this week. Some of you guys have been expecting this for a while now. We can officially say it is here. Bullish candle reversals. What we're looking for, since Darknet is a bullish scan, we're looking for bullish reversals. So we want a bullish kicker, a bullish harami, a bullish engulfing line, a morning star reversal type pattern. We have 5 bullish candle reversal patterns programmed into the tools that if one of the days of that candle pattern is also a Darknet bullish signal, it will show up on the filters. So here, let's see if there's anything. Well, there was no candidates for today, so there's not going to be any further bullish candle reversal patterns for that day. But for those of you that like candlesticks, you know that it's taught, don't use candlesticks in and of themselves. You want to use them in conjunction with Western technicals. Darknet is a Western technical combined with the bullish candle reversals, and we'll see what we get. I'm going to set this back for 20 days and click on search, and we'll see what we find. The question is, are there any Darknet spreads? You're kind of leading the class. There are. I'm going to show that. Yes, sir. Okay. So here we go. Let's scroll on down and VXX. Okay. Now, it's not that I want to show you a trade on VXX. This happened 14 days ago, and it shows you everything that the previous Darknet bullish scan showed you. It just brings in one extra column called pattern, and it shows you that not only was there a Darknet buy, the type, but the pattern that was accompanying that, or that Darknet B was a part of, was a bullish kicker. So click on VXX, and you can see right back here, there's your Darknet B bullish pattern. The BK right there is standing for the bullish kicker. Okay, BH would be bullish harami, BE would be bullish engulfing, and so on. And it's just going sideways here over the past 14 days from that signal. But that's an extra level of filtering that you can do. So you're going to take your Darknet list. Sometimes there can be 30. If you go to a Darknet list of 30 with the bullish candle reversals, it may reverse it down to 5, and that's great. Now we only focus on 5 versus the 30. We're much more efficient in our trading and our research, and we can get to our trades much more efficiently as well. Okay. So now let's go to the call option trades. I thought I saw Alibaba in here a handful of days ago. Let me see if I can find it again. 10 days back and see if that showed up or not. Nope. Okay. So the question was Darknet spreads. Let's go ahead and click on the spreads. Do the penny weekly list. Click on search. And if there are any Darknet spread opportunities, it will show you that here as well. So there's SDS, there's ARNC, MPC, Bristol Myers Squibb. Click on the Darknet picture. You can see the B bullish signal happen, then the reiterating bullish signal, found a bottom, spiked from there. You can click on the chart to make it disappear. So basically it shows you the handful of stocks here that have an opportunity. Again, another reiterated bullish earnings. That one doesn't look as sweet. But if you see a Darknet pattern that you like in the Darknet spreads, and it's not too many days ago, and over in the column it shows how many days back the signal happened. Okay, so if there's a Darknet signal days ago with a put spread on that, it will show up on the scan here. You can actually do it on a specific symbol too. That was asked yesterday. Can you look at a stock and do the scan? Yeah, you sure can. And there's BABA, there's Darknet right there, BABA. There's your bullish signal. There's your sell or stop signal. It doesn't mean that's going to absolutely reverse to the downside on these S signals, guys. It just means that up leg from the B and the R signals is possibly stalling or stopping. It may stop and stall a little bit and then catch wind and continue higher. So don't treat that as necessarily an absolute sell short signal and go short this, because Darknet's not finding bearish signals, but it is showing that the possibility of that up leg is possibly stopping at that point in time. All right, so no current candidates for today in Darknet. So let's move on to money calendar. And money calendar, I'm already on the list. So let's go Tom's Tools. Same thing, you'll find money calendar. Yeah, thanks, Becky. I thought I saw that too. Okay, Becky said it showed up yesterday. Thanks. All right, so money calendar. Click on the money calendar icon. Money calendar, to review, is not a technical indicator. It's not a scan based on any technical analysis. We're not using indicators, oscillators, nothing. We're purely focusing on price over time. So has it made a move higher or a move lower over a specific period of days at a consistent and highly consistent rate, meaning 9 of the past 10 years or 10 of the past 10 years. And if it's 9 of the past 10 years, that's a 90% accuracy. A 10 of the past 10 years, 100% accuracy, meaning it shows that over a specific period of days from a start date, open price on a start date, to the closing price on an end day, it has moved higher in price or it's moved lower in price. So yes, money calendar will find both bullish and bearish opportunities. People want to add technical indicators onto the money calendar. You can do that. Recognize either of two things will happen. You'll either talk yourself out of a trade and stay and wish you didn't because it worked, or you can gain much more conviction for it and wish you hadn't. The thing is, add in whatever you want. It's not necessary though, because based off price over the specific period of days over the past 10 years, it's shown that it's moved higher or lower 9 of 10 years. So if we scroll down, we look at the color coding and the numbers. We started out color coding this. We started out with the green and the red. And green, the deeper the green, the more bullish the number of candidates for the day are versus the bearish. The deeper the red, the more bearish candidates than there are bullish. We found that there are a number of subscribers that are green and red colorblind. I'm not sure the medical term for that or the term for that condition, but because they couldn't distinguish the colors, we added in the numbers. So we not only provide now the total number of candidates off this proprietary money calendar list, we then separate out how many of them are bullish, how many of them are bearish, and the percentages. And you can see this last week of April here, the last 4 days are in the majority bearish candidates. That could be because we're coming up on the sell in May and go away. Daltonism, thank you, Jim. Appreciate that. That's the term for the green and red color blindness there. I knew somebody would give that to us, Tom. You just have to intimate that you're not quite sure and somebody's going to help you out. So thank you, sir. All right, so here we are. We're looking at predominantly bearish tone, meaning from these money calendar candidates, more of them are bearish than bullish. So you would take that and you say, okay, so let me click on today's date because that's where we're at, the 29th. And you see the data. Here's the symbols. Here's the duration. Green means it moved higher, bullish. Red means it moved lower, bearish. You want to focus on the power meter column to start. Okay, you can get average profit. You can see the accuracy. You see the end date. That's important information to note because before you go over to the options analysis part of the tools, you want to note as much of this information as possible for you to help you then research what option trade you're going to go after. Let's start with the power meter. Tom always says double left click on power meter first. This ranks the power meter from the highest positive number to the lowest, and you will even get negative numbers. Disregard everything that's 0 and negative because those aren't worth our time. What the power meter is gauging, and I'll just click on TTWO. Actually, UNH I think had a prettier power meter. Look at that. What we're looking at here is the yearly trade results, the past 10 years, 2010, 2019. Each of these years over this specific period of days, UNH has moved higher 9 of the past 10. And the last time that it did not move higher over these period of days was 10 years back. If you get a red bar, a loss in the last year or two, we move past that. 3 years or further back, we're okay with continuing on and further researching. You put your cursor over one of the bars, it shows you the P&L for that year, a profit of 9.89. Okay, it moved up 9.89 points. You can click on that bar and you'll see the candlestick representation of that price move for that year. The higher the positive, the more positive, the higher the number for the power meter, it means the more recent years are increasing or showing a higher profitability versus the cumulative 10 years overall. So the higher the power meters or the profitable moves in the more recent years are over them all, the higher the power meter number. And higher the better, okay? Let's click on View Day. Look at UNH. You could have left it on that previous screen and got the information I'm going to show you want to accumulate, or go back to this page and do this. So we have a positive power meter. That's fine. 9 out of 10, 90%. And boy, the profitable moves on UNH are going higher in the more recent years. We can't guarantee that it will continue to do so, but if you want to play probabilities and you're a speculator and you're an options trader and you want to stack as many favorable characteristics as possible in your favor, UNH shows that 9 of the past 10 years, this thing has moved higher, and it's moved higher an average of 5 points. Okay, so before you go into the option trades, and I won't take us into the options trades, but I'll show you one other bearish opportunity here, because you want to do this for both bullish and bearish. And we typically like these trades that go out past 20 days. 20 to 30 days is our sweet spot. These 2 days, 4 days, 5 days, it's got the back-tested history to show that it has made those moves 90 to 100% of the time. We're just not using money calendar to trade that short a time frame. We're not looking for money calendar to trade weekly options. We're looking at this for a 20 to 30 day time frame, going at least a month to 45 days out till expiration. Okay, so on UNH, what we would do if you wanted to pursue this is you would write down on a separate sheet of paper UNH, the ticker. You want to put the end date, which is June 8th, and then you want to look at the expiration just past June 8th. So go to your calendar and go to June, and just past June 8th, we would start looking at a June 12th. You want to be safer, go to the third Friday, the standard option expiration for the month, June 19th, because as Tom's pointed out many times, that there's more efficiency in the liquidity and the pricing of these options on the standard third Friday expiration. The thing to note, though, is you're not going to look to hold this trade until that expiration. The end date for this, shown by Money Calendar, is June 8th. So regardless of what options expiration you have past that, if you try to hold on to that trade past that June 8th end date, you're doing so blind in a sense that you don't know what calculated and back-tested data we can expect, because Money Calendar's end date was the 8th, not the 19th. You're just making sure you give yourself an expiration past that end date, because if you did it on the 5th or sometime in May, you're going to have to close out the option because your option expires prior to the end date. And who's to say that that last week of that run for the end date isn't the week in which it made its highest move, and you've kind of cut your legs out from underneath you here by having an expiration that's too short from the end date. So go out past that rather than prior to it, and don't expect to hold it until the expiration unless the end date and expiration matchup is the same, and that happens from time to time. So UNH, end date June 8th, expiration the June date after that. You want to write down your average profit. That's your expected price move in the upcoming 29 days. And then what you want to do, and we advocate, and this is a review from yesterday, doing this at the end of day. Because if you're looking at a stock that could go up 5 points on average, but you look at the fact that UNH is down 2 points today, or whatever it is, that could talk you out of moving forward. So get rid of all the intraday market moves and keep that stuff outside of your head and not affecting your decision on moving forward with further research. So take your average profit, add that to the closing price, and that becomes your price target. Okay? And then you can go to your options and start doing your research. Let's show one more here before I turn it back over to Tom. Let's look for bearish, okay? And the bearish opportunity I was going to try and show you was on, was it TPR? Well, no, because it's got a negative power meter. We won't mess with any of these. All of these bearish candidates have a negative power meter. You don't want to fight against a stock or security whose profitable moves are getting less and less in the more recent years rather than higher and higher in the more recent years. So really, guys, if we click power meter twice and we rank UPS, UPS is a 20 to 30 day bearish move. Bearish because it's red, it means it's traded lower. Click on UPS and you can see the calendar highlights the red days, indicating a bearish move. And it's been a pretty ho-hum profitability over the past number of years, but last year was a big spike in profitability of 8 points. Now, how is it that a stock can show a profitable move when it's trading down in price? This is under the premise of it being a short sale. The profits, power meter does not assess direction. It doesn't show you higher, it doesn't show you lower. It just means that the profitable move, the price move in the more recent years, are we seeing a more robust move or not? And that was the best profitable move over the past 10 years. And the fact that this traded down, it traded down 8.69 points. It's under the premise of a short sale. You sell short at, say, 103, buy it back at 92, and there's an $11 profit there for you, okay? So that's what we're talking about with profitability on short sales or on these bearish money calendar trades, okay? So now let's go back, and we can leave it here. I'll show you this. We got the same information in this row of information right here for you, 90% accuracy. We just don't have the end date. We have the end date up here, though. So if you're going to look at a bearish opportunity on UPS, and UPS reported their earnings, I think, yesterday. So if we go to earningswhispers.com, go to UPS, and click on search, April 28th, yeah, sure, it happened yesterday, okay? So back to money calendar. So earnings isn't something that we need to worry about. UPS, end date, 5/27, expiration, and you wanna write down your expiry. What's the expiration just passed? Isn't that June 2nd? No, May 29th. If that's a weekly that you're not happy with, you can always go out to the June standard expiration. Just remember the end date though is May 27th. So write down your expiration, May 29th, June 5th, June 12th, whatever the case may be. And then you're going to want to write down your average trade or average profit expectations. And the last point I'll make on this is it says $2.08. This isn't a great example. Let's just say you had this kind of action, and then the last 3 bars were like this one here, 8, 6, and 5. So that's 19 points over the past 3 years cumulative. So if you take 19 divided by 3, you know, that's a 6 plus. You would take your average profit in the more recent years like Tom and I do, and let's just say, hey, even though it's $2 over the past 10, it's moving 6 points on average over the last 3. Let's use that as our research and add that to the current price. So take the closing price, add your more recent 3 years average, and make that your profit target, or you just stick with the 10-year average, be a little bit more conservative, and say, okay, what's the closing price plus $2? That's my price target higher, and then go look to build your option trades from there. So there you go, Tom. There's a bullish and a bearish out there for them to do further research on, and I will wrap with that unless you see anything else I need to address, sir.
No, it looks good. Thank you very much. And you know what? I'm going to pop back. I'm going to pop back in and show them a couple of other little tools that are in that actual area under cryptocurrency. So what I want to do with you guys for the rest of this session is we're going to take a look at Boeing, which I have on the board right now. Everyone should see this. I also want to take a look at Facebook. They both have earnings coming out this week. I'll tell you what I did with each of these. And I've already got a trade on in Boeing. I just made an adjustment to it. I've got I'm looking at doing something in Facebook too, and I'll explain what I'm doing there. And then I want to get into cryptocurrency, and I'm going to talk about cryptocurrency and try to stay basic on it and spend a few minutes talking about crypto, what is crypto, how I got started in it, altcoins, the best exchanges to trade on, and then I want to end on something called security tokens. All right. I'm also I'll let you know right now. So tomorrow we're going to get into trading, building and trading a trading system. All right, one of my best trading systems, and I'm going to basically give you all the rules to it, all the code, so you know exactly what it is that I'm doing. But that is part of my System Mastery course that I'm going to be launching. This is a premium service. I do this once a year only. I'll be launching that on May 11th. That's going to be all my best trading systems, rules and codes, scans and apps, and we have a lot of apps that we've developed. I've got 3 more in development right now that are coming out of development that are based on the stuff we're going to be talking about. And so that's going to be included in the program. Access to me, access to Jay, access to each other, because this is a community where we're going to open up access to everybody who's part of the group. Money back guarantee, because we do that with all of our premium courses. And most importantly, I did this for the year for our partners, and I'm going to extend it to our System Mastery members. Is that part of this program is going to include cryptocurrency and how I trade patterns in cryptocurrency. And as a graduate of the System Mastery course this year, I will be giving you cryptocurrency, all right, an altcoin that I was, I guess part of it was luck and part of it was skill and whatever that I invested in long ago that is doing tremendous right now. In fact, this company that this crypto is on, well, it's based on a gold mine in Colorado. They will be in production next month mining gold, and so that's how this cryptocurrency is going to be paid going forward. I'll tell you a little bit more about it here in a few minutes, but that's going to be what I'm going to do. Is the cost of this mastery program, which is a fantastic price already, I'm going to be gifting cryptocurrency to all of our graduates of that program, to the entire cost of the program. So basically what you pay in mastery class, I'm going to be gifting back to you in cryptocurrency. I cannot make it any better than that. I've done so well with this currency or this cryptocurrency, and so I have quite a bit of it, so I'm able to do that. In fact, I think I calculated it up. I'm going to be giving away somewhere near $250,000 in cryptocurrency as part of the program. I'll get into it a little bit more today, but we're going to officially launch this tomorrow. So I'm just letting you guys know what the plan is. All right, so Boeing, what do I got going on with Boeing right now? I actually have a calendar spread on with Boeing, and the calendar spread is right down here at the 100 strike. All right, I put this on after the bounce up, and I adjusted it. But basically, I did another adjustment today where I took the short puts off. I think I bought them back for a nickel. And I'm holding the long puts that have a May 8th expiration on them. And so we have an earnings report that's coming out here just after the close. And once that report comes out, we'll see what ends up happening with Boeing, if it makes a move up or down. But I've already adjusted this. This will be the second adjustment, and I've almost paid for the calendar spread by rolling it, something called rolling that we do. All right, but I'm long right now. What I'm left with is long puts on Boeing, and so we'll see where those end up at. With Facebook, let's bring Facebook up. It too has earnings that are coming out today at the close. Now this is an interesting one because Facebook right now, as you can see, had that high. Now they had an earnings miss last quarter, okay, and then the stock ended up going from about I want to call it about 224, and the next day it was down into around the 205 area. So that was about a 20-point drop right there in one day. Then it scooted along and resuscitated itself before falling victim to coronavirus like everything else did and dropping down to $140. This has been a heck of a move back up, and it extended that move today. Now I'm waiting for the ding. And when I hear that ding, I'm going to hit that bell again. I'm going to let you know that I got filled because I went ahead and put an order out early. I typically like to put these out, about 15 minutes before the bell, but I wanted to put it out there early because it is more of an efficient trade. But so far I haven't gotten filled on yet. So what am I looking at doing? Again, Facebook, and let me just bring up some options here on Facebook. These are the options. I'm looking at the May 1st options. They expire in 2 days, okay? And so what I did was I went ahead and let me update this again. We'll come down here, and I've got calls on the left. I've got puts on the right. I'm going to expand this out so everybody can see it. So these are the calls. Right now, and this is something that if you are, some of you may already know this, but some of you don't, but I'm going to go ahead and give you a little lesson on it right now. So if you take the at-the-money, the price of the at-the-money call that's the closest to expiration, and that's the May 1st, they're trading at 630. And you look at the at-the-money puts, and they're trading at 660. So what's 630 plus 660, right? That's going to be $12.90. Let's just round it up and make it 13. So $13, all right, is what the option traders are projecting that type of a move, all right, off of, and off of something that's almost, that let's call it, it's almost $200 a share. We're looking for about a 6 to 7% move in Facebook following the earnings report. Right, that is determined by taking a look at those short-term options. You're at the money put and at the money call. You add them up, and and then you look at that as a percentage of the stock price, and that gives you a really good read on where traders are expecting this stock to go. All right. So if I am going to take a short outlook on this, and I've not gotten filled on this yet, one of the things I could look at is I could look at buying a put spread. All right, and that would be maybe looking at the 195. 190 put spread. Okay, let's go ahead and just throw that one of those together real quick, because I'm going to make our cryptocurrency education rather quick here. But if you take a look at this, so this is $235 risk to make 265. All right, but we need Facebook. We actually need Facebook to go down, and it needs to go down to 192.65. All right, by when? By Friday. We need it to move. Okay. Now, chances are it's going to get up and move after the earnings report. But what I also could do is I could look at creating a credit spread, a bearish credit spread, and that would involve calls. So if I were to sell the 195 call and buy the 200 call, it's going to give me the same, almost the same kind of risk graph. See, it is the same bearish risk graph where the market falls. I could make some money here, all right? This one, oh, you know what I did? I just threw it together as a combination trade. My bad. Let's clear this out and try again. Sometimes I end up doing that. So clear, and again, I'm selling the lower strike call, and I'm buying the higher strike call. And this is what's referred to as a credit spread, where I'm looking to take in the money first. And so this is being done right now for 215. I'm trying to get this for 2.5. It was a little bit higher earlier. In fact, it was pretty close. It came up to 240. I was looking for it to go 250 so I could take in 250 and risk 250. But right now they're not playing ball with me, but I still have another hour on the clock for that to potentially happen. So trying to sell the 195, buy the 200. Here's what this looks like. What this looks like is if the stock simply stays is at or below 195 by expiration, I bring in the credit that I receive. But if the stock has to move away from me for me to lose money on this trade, meaning it actually has to go up at or above 200 for me to risk the $250. So again, what does that trade consist of? Buying the selling the 195 calls, buying the 200 calls, taking credit in. I'm trying to do that credit for 2.5, all right, for $250 per contract spread. And then if all goes well, I just let it expire worthless on Friday. All right. So we'll see. I mean, there's a low chance I'm going to get filled on this because I had a better chance now than I did. Facebook was actually trading up here at the 195 half area, so it was actually slightly in the money. But it's going to have to get back up here again if I want to get take a chance on that that actually happening. All right. I'm looking at Facebook right here. 195, 119 right now on the chart. Okay, let's talk about cryptocurrency. I'm going to turn off this, I'm going to toggle off this big orange mouse I have because I won't need it right now. So I just want to spend a few minutes with you guys talking about what cryptocurrency is, Bitcoin, Ethereum, getting started with crypto, how I trade cryptocurrencies, and then I want to show you secure tokens, and I want to show you the token that I currently own quite a bit of, which I'm going to be doing a gift to my System Mastery members. All right, partners in the room already got this gift, or they're getting it, excuse me. They're already assured of getting this gift, folks that are in my partner program that started at the beginning of the year. You're already going to be getting this, but anyone that signs up is also going to be getting a gift as well. All right, so what is cryptocurrency? I mean, the definition is basically a digital currency in which an encryption technique is used to regulate the generation of units of the currency, and also that's used to verify the transfer of funds. So basically, it is a digital currency. That digital currency is shown in an alphanumeric code, which is referred to as a blockchain. Blockchain is a process in which someone requests a transaction. Maybe you're buying or selling something and you want to take Bitcoin as an example. All right, that transaction's validated. Once it's verified, it's recorded on what's called the digital ledger. It's like a receipt, and then it's added to the block where it can't be altered. And that's the process of blockchain. Now, Bitcoin, I actually started with Bitcoin mining it back in 2013. Okay, so 2013, I moved into a new house, kind of upgraded my space a little bit, and moved into a new house. And I, at the same time, had ordered one of the very few Bitcoin mining machines. It's just a big computer. It looks like a small refrigerator. And so I put that in the house that we were moving into, and I put it in the loft upstairs. It was so loud you could hear it. You could hear it upstairs, you could hear it downstairs. And those open floor plan houses, you know, this thing was buzzing. My wife hated it. She hated it, she couldn't stand it. And it got banished to the garage. Now in Florida in the winter time, it's not that bad because winters are mild here. I would have loved for it to be colder, but this thing was it had the equivalent, I think it had 16 fans on it. That's how many fans it had on it. And it was humming and it was generating heat. And I'm telling you, we walk in the garage because the garage was not air conditioned. But even with temperatures outside being like the 60s, the temperatures in the garage were in the high 80s to low 90s. So eventually I could not use it anymore. I mean, I had it spinning for I think all of about, it was a few months easy that I was mining, and I was pulling out one coin a week at the beginning, and then by the end, I think it was maybe more like one coin a month. That's how fast it degraded because more, better, faster mining machines were coming online. And so I ended up turning around and selling that mining machine, but not after I'd stripped up, several Bitcoin from it. I learned a lot about Bitcoin, about different types of mining techniques, digital wallets, etc. And at that time, Ethereum was starting to become the next coin that was out there. So there was only a few cryptocurrencies when I started mining. And so the first thing that I needed to do at the time was, you know, when you have cash, most people put cash in a wallet or purse. And so I needed a digital wallet. So when I started out, I had a digital wallet. I've got several digital wallets now. Some are online and some I actually store. I store the bulk of my cryptocurrency offline in what's called cold storage. But when you get started with cryptocurrency, think about cryptocurrency like cash, all right? You can use it to pay for goods and services. The difference between a US dollar and say cryptocurrency, if you look at a US dollar, it has a serial number on it. Okay, think of the cryptocurrency, your cryptocurrency as having that something similar, an alphanumeric code, and that's what your digital wallet consists of, right? So just like you'd store cash in a wallet, you store crypto in a digital wallet. So setting up your first wallet is in essence one of the easiest things to do. It's one of the first things you need to do so that you can have the ability to buy and sell cryptocurrencies themselves and use them to buy to exchange for goods and services. So a wallet is used mostly most people use wallets off of what's called the exchange, and you can create wallets right on the exchange. And one of the first places that I would suggest you go is a site called Coinbase.com. All right, if you're here in the US. If you're coming to me outside of the US, then you can use a exchange like Binance. So for instance, if you're using Coinbase, which is Coinbase.com, you could go in and you have the ability to look at products and you can buy and sell cryptocurrency, and you would use the Get Started button. And the getting started button would get you in there, and you would have to verify. All right. You go through a verification process. Once you do that, you can buy, you hook up funding. You go from there to actually buying and selling your first cryptocurrency. And you're well on your way. Okay. And one of the things we do in System Mastery is we're going to spend a week on cryptocurrencies. And we're going to talk about, one day we're going to talk about nothing but Coinbase and the coins that are in Coinbase. And then one week we're going to talk about nothing but Coinbase Pro, which is a more advanced way to buy and sell cryptos. And then I'll even spend a little bit of time with the international group and talking about Binance, okay? Because the majority of the cryptocurrencies that I buy, sell, and trade are on one of those few exchanges. All right. And so most of us know Bitcoin, Ethereum, Litecoin, etc. There's a great website you can go to where you can chart them all, and that is a place called coinmarketcap.com. So CoinMarketCap, let me blow this up so you can see it. CoinMarketCap.com is where you see the top 100 cryptocurrencies by market cap, and sitting at the top is Bitcoin. By the way, Bitcoin has been on the rise quite a bit. It's up 11% today. In fact, last month, in the month of March, it was down as low as 4,000. It traded to $4,000 a coin. It's back up to 8,600. You can see the volume that's transacted. These are big. This is $6 billion right here that exchanges hands in cryptocurrency on a daily basis. And you can see here, Bitcoin has $158 billion market cap, and that's just at the price that it's at now. Its market cap high was well over 300 billion at one time. Ethereum would be the next one, and Ripple's the third. These are the three big ones right now in terms of market cap. Market cap is just like a stock. You take the price of the digital asset, you multiply it times the circulating supply. Now, there are only 22 million Bitcoin that will ever be minted. Look what's out there right now. So there's less than 4 million left out there to be digitally mined. Once they're done, they're done. There will be no more that can be pulled out. Unlike the US dollar, which gets minted more and more by the hour. Okay, and that's why I think this makes such a fantastic asset, but it's not the only one. There's a lot of altcoins out there that are actually undervalued. Okay, so that's coinmarketcap.com. Now, we're talking about Bitcoin, and I started to get into altcoins. Altcoins are alternative coins. They're much cheaper, they're less known than the bigger coins, and these are a little bit riskier, meaning that you just can't go out there and just buy them because, they're cheaper. If something's cheap, it's out there, it's cheap for a reason. And, there may be 1,000, if there's thousands of coins out there, there are maybe a couple of dozen to, let's call it 50, that I think are the best of the bunch out there. So they require a little bit more research. They require a little more, and research and investment in time than the bigger foundational coins, which are out there and there to stay. Now, trading altcoins, I go through one of three exchanges. What's really incredible is that Coinbase.com is trading a lot of the big altcoins, the top altcoins. So they used to be just Bitcoin, Ethereum, and Ripple. Now they've added EOS, they've had Tezos, they've had Stellar, Chainlink, Dash, and several more. But outside of that, where I go is the advanced area I go to is Coinbase Pro. And that the difference between Coinbase and Coinbase Pro, Coinbase itself is great for the crypto, the person who is a crypto investor. Okay, so if you invest in cryptocurrency, you really don't need to go any farther than Coinbase. But if you're out there looking at trying to buy limit orders or stop orders or get in and out of these things, then you want to be looking at an advanced platform like Coinbase Pro. And Coinbase users can use Coinbase Pro. All right, it just takes an additional step. Again, if you're outside of the US, then Binance is the place to go. That's one of the biggest exchanges that's an international exchange, and that is BINANCE.com. All right, so we talk about those in our premiums webinars at much more length, all the way to what we do with each of those platforms. Frequently asked questions: how do I store my coins? If you're in Bitcoin, Coinbase offers Bitcoin wallets. So you just go to Coinbase.com, click on Help for more information. For other place-based coins and cold storage wallets, and what a cold storage wallet is, visit myetherwallet.com or myether. If you want to, I mean, it's called Ether, but it's MYETHER wallet.com. That's a great starting point you can go to learn more about storing through what's called cold storage. Okay. Outside of the U.S., you can go to, if you're outside the mainland, you want to set up a Bitcoin account, you can check out buybitcoinworldwide.com. That'll give you details for practically every country in the world, and where you can go from there. All right. And then you've got Binance.com is what a lot of the international traders use. Okay. And then, do we have any patterns for trading Bitcoin or crypto? I'm going to share with you a couple of patterns that we have right now. I'm going to take you into 3 different places for these particular patterns. And so I'm going to do that right away. So let's pop on over first to crypto charts. We have cryptocurrency charts in Tom's option tools. So if you have an account with Tom's option tools, we have an area, just mouse over the home button. Okay. And then let me turn that big orange thing on again. There we go. So mouse on over the home button, and we've got crypto tools. And then once you go in there, you can get to our crypto tools site, and we've got crypto tools, a startup. We've got Darknet for crypto. All right, for those of you that didn't know that, we've got crypto moving averages, and then you can go back to Tom's tools as well, just by within this home screen. So what I'm showing you now is a Darknet chart. This is the Darknet chart for crypto, and you can see here the last Bitcoin Darknet was right down here when we were coming out of that 5,000 to 6,000 range. And of course, we've hit 6, 7, 8, and now, up here in the high 8s, 86.24 as of this last chart. Over here, you've got the controls. We have every crypto that we follow, not all of them, just the ones we follow. But then we also have them down to which crypto currencies are traded in Coinbase, which cryptocurrencies are traded in Coinbase Pro, and then Bittrex, Bittrex. So if you go to Coinbase, for instance, and I click update, what that'll do is that'll take me over here to the symbol, and I mouse on the symbol, and it shows you all the coins that are available in Coinbase. Okay, if you go to all cryptos, you can see here, we follow an extensive area, as you can see here, for all the cryptos that we're following. So that's the first area I can go to. Next thing is I have a crypto calendar, and under our tools in the money calendar and the money patterns, we call them, we have a couple other buttons. We have the crypto calendar button and the crypto clock button. The crypto calendar button allows us to go in and view those areas where we see bullish and bearish opportunities on the calendar. This is actually looking at Bitcoin. And Bitcoin actually has, if you look here, we've got a couple 88% patterns that are happening within the next 6 to 7 days on the crypto calendar. Okay, if I look at the crypto clock is actually inside of a trading day. Now, I used the crypto clock yesterday, and that's what got me in and out of SPY, that bearish trade on SPY and that bullish trade on gold. And so we actually have a crypto clock for Bitcoin. You can see here that we're looking at Bitcoin. We had a couple of 100% buy patterns that were happening this morning. Now, the crypto clock for Bitcoin is different than the one for stocks, because the crypto clock for Bitcoin starts at 12 o'clock midnight and it runs all the way to 12 o'clock midnight. So this is a 24-hour clock that we run on our cryptocurrency, and you can see here we have it for all the top cryptos, not just Bitcoin, BTC. All right, so we have those available, and for those of you that are, have access to our tools and you get the complete trader, then you have access to the crypto calendar and the crypto clock, along with all of our other things as well. And recently, we actually now have an app for cryptocurrencies that we're going to be making available during System Mastery to all of our System Mastery members. This is a microcurrency app, which is basically our cryptocurrencies, only it's going to be in app format, which is really nice and clean, and it just gives you all the signals. It gives you currency wave signals, it gives you Darknet signals, and it gives you all the coins that we're tracking as well. So that's something that we offer too. My biggest investment in this space in cryptocurrency right now is not Bitcoin or Ethereum. It's a token called the Moria token. The Moria token was named for the mines of Moria, and this is off a gold mine that is in Colorado. And if you wanted to take a look at that, you could go to moriatoken.info, or is it moriatoken.com? It's more, either one of them should take you to Moria token. And so yeah, so it shows you the Moria token and where it's at, the number of tokens created, where it's listed at. It's listed at token.store. Talks a little bit about the token itself, and of course what it's based off of. All this information up here. I'm not showing you this to buy it because you can't get it below market price. That day is come and gone. But what I am telling you, the reason I'm showing this to you is it's based off of this company GS Mining.
Interest in mining locally, as far as
you can see here, I just opened this up, and
is sort of the, here we are doing it.
If I could shut the let's do that. Let's shut off the, there we go. That's like somebody talking from me. I thought it was Jay for a minute. Yeah, so it tells you a lot of different information about what this is about. The reason I'm bringing this up to all of you, and let me just go ahead and stop that right now, is that I'm bringing this up because this is something that I am going to be offering as part of our System Mastery program. Okay, it's a compliant token. It's SEC compliant token, so it's something that is a security token. A security token is like having digital shares in the company. All right, it pays a quarterly royalty and has been paying out for the last couple of years. Royalty is expected to increase because they're expected now next month to be in production. They're going to be in production of gold coming out of the mines. I've actually gone to this mine. I did some research on it, went out to Colorado, saw the mine, saw the mill, and was very excited about this. And as one of their first investors, I saw the value in this, and it's just gone up. The Moria token, this was an earlier price of this token today, $18.88. And so again, I'm looking at this on token.store, which is where the token is. Here's the thing. What I am doing for my community, and I'm going to talk about this and launch this tomorrow, but we are going to be doing something called System Mastery. And System Mastery is going to be my best trading strategies and my best trading systems. Let me just show you kind of an idea of where all this is at. So if we go to Tom's Option Tools, and we come up in this area, this is the premium area. So over the last 3 days, we've talked about option trader, we've talked about contrarian trader, we've talked about complete trader. And tomorrow, what I'm going to do is I'm going to go inside the premium tool category. We are going to build out a trading system. All right, we're going to build out a system that I call the triple threat system. All right, give you a sneak peek. Here's System Mastery. This is what this program is going to consist of, is learning the foundations amongst all these trading strategies. All right, so triple threat, just to give you an idea. All right, this is I'm going to teach you this, but let me show you. I'm going to do a back test on it right now. Let's go back 1,200 days. That's over 5 years. That'll take us back to back in 2015, and you can see, and this will include what's happened recently too. All right, so it takes a few seconds to back test this and go back and see how well this is done. But you can see 93% profitable on this position, almost a 3-to-1 reward to risk ratio across the screen. And you can see some stocks that are in here and how they've done using this triple threat strategy. Everest Research Group, 21st Century, Phillips 66. There's MasterCard number 4, and you can see it right now. All right, and you can see how it's done in terms of back-tested total profits, max profit, percent winners. We've got some percent winners that are up in the 100%, like Everest has had 5 trades, 5 winners out of those 5 trades. MSCI is 75%, but I can rank this by past winner. You can see, how well these have done. Stanley Black & Decker, 80% winners. MSCA, Estee Lauder, 75. Lam Research, 73% winners. This is 5 years back test. So I'm going to be teaching you that, and the bearish one as well. We'll talk about what that entails, but that is all part of our system mastery program, and I'll explain more of that tomorrow. So tomorrow, what we're going to do, guys, is we are going to go in and we are going to talk about trend trading systems. I'm going to talk about George Fontenelle's kind of started me down this rabbit hole with a trading strategy that he used to teach at every single Optionetics seminar. And all we did was back tested it and made it better. All right, so I'm going to talk about that. I'm going to talk about SPY. I'm going to talk about our velocity trade, our 24-hour earnings trades, our earnings bull and bear trades. I've got Fly Trapper in here. We've got something called the daily clock. All right, and I'll show you what the daily clock is. Let's do a sneak peek of daily clock real quick. Want to know where I found those trades? We have these on the grid scan right here. All right, I've got them on the grid scan. I've got stocks on here as well. These are ranked based on what they've been doing. 100% ranking on Amazon during this particular time frame. This is all basis the daily clock. And so again, all of this I want to teach you. I'm going to be teaching it through a program I call System Mastery. This is 2 months. This is a 2-month program we're going to be doing starting May 11th. Again, I will give you the links and the signups. There is a strict number of people that we are allowing in the program, but I am going to just sweeten this pot up because this program will include, I'm going to give all of our graduates of this program, once the program's over, as a graduating gift, you are going to get cryptocurrency that is valued based on that token store value. Now, I don't know where, I can't guarantee where it's going, in the future, but it's done very well for me. And so I'm going to be offering that up as a gift. The entire cost of what you end up paying for System Mastery, guess what? You're getting it back. You're getting it as a gift in Mori token. That's going to be my gift to you. How can I do that? Because I got it for a lot lower than where it's trading at right now. That's how I can do that. So, guys, I'll give you those links tomorrow. We're going to launch this program tomorrow right here in class so that you can see that. Pete's saying that Mori is actually right now at $19.34. And that's an old, that right there was an old price that you see here. So, I mean, that thing changes just like stocks. It changes by the minute, right? So we'll get into that. I'll get into much more. Jay, are there any questions that you see that are kind of high volume questions that I might be overlooking before we finish up today?
No, sir, not in that category. A few people asked earlier when I was talking about the STX we showed yesterday.
Yeah.
I mean, if you want to show a chart real quick, I can make a 30-second comment on it.
I can. Let's go back to stocks.
Yeah, I did say this showed up as a money calendar bear. Is having a great day today to the upside. STX, Sierra Tango X-ray.
Got it.
Okay. So we didn't recommend this as a trade. We did show how to find the option trade, and I think the one that was shown was a $50 put. So, our typical stops on these are 50% stop. We look for 100% gain, 50% stop. Again, disclaimer, it wasn't shown as a recommendation, but we did show the option and how to find it for educational purposes. But if anybody is tracking that option, just note that you may be very close to or at the 50% stop on this right now.
Is this a real short-term trade, Jay?
Yeah, it was a money calendar. It was a money calendar. Right. So no more than 30 days out. But we can get a double in a day. We can get a 50% stop in a day. It's just how these things work out.
Yeah.
The thing we like about the 50% stop is the loss is short and quick. We can recover for that when we start making 100% on other trades and such. If you're not doing anything with the option, you can still track this out and see how it does, because you know, it has an end date. So you track this through to the end date and just say, hey, you know, this is one where the money calendar didn't work, you know.
Yeah. Oh, and you know what
Mark
Mark brought up a really good comment, and I need to make sure everybody realizes. And before I mention his comment, you know, I mean, we say it at the top of our educational programs here, every one of these live streams that we do, is that, you know, we're not your investment advisor. We're trying to teach you how it is we do this, you know, and more so for, you know, we're not putting out trade alerts here with buy to opens and sell to closes. We're teaching you how to do this for yourself. And that's the whole purpose of this. But on the cryptocurrency side, Mark's asking, he says about the BTC fork, and what's happening is that Bitcoin's going through a halving process starting in May. It's actually going to start on May 12th, and so we start our system master program on May 11th, but on May 12th, Bitcoin is going to be doing a halving, and what that basically means is that the miners, the ones that are digging up cryptocurrency through process of algorithms, are only going to be receiving half the value that they were prior to that. So what that basically means is that less and less, if you're mining gold in a spot, eventually you're mining less and less because there's less of it there. Think of that same thing with Bitcoin and cryptocurrency as a whole. And that in itself, when supply goes down, when the supply coming in gets less and less, what do you think that does to the price? It makes the price go higher. And we've been talking about this fork happening now for oh gosh, I want to say at least the last 30 days. And so that is something that you know, is on there, and that's something that, you know, is you know, going to come, and it's not going to get it. You know, Bitcoin and cryptocurrency as a whole, you know, on a token by token basis, are not going to continue to get to expand. You can't just print more Bitcoins. Once they're all gone mined, they're gone. That's it. And so if you have something that has less supply and the same demand, it goes higher. And so that's what we're expecting. I expect Bitcoin itself to be back at the $20,000 mark, and it would not surprise me if that's going to happen before the end of this year, because we are in unknown times right now. We are in an election year too. And all of this uncertainty, I believe, is fueling Bitcoin to move higher. It's making quiet moves up right now. You're not hearing about this on, you know, CNBC or financial news. You'll start hearing about it when it gets above 10,000. You'll start really hearing about it if it gets above 20,000. Then it's going to become, you'll see that little Bitcoin ticker again will be on financial news, where they'll put it right there next to the Dow. They stopped doing that. That was over a year ago. You stopped seeing that. And it'll come back on again, because that kind of stuff brings the reporters, once it's in their mind worth reporting. So I'd rather do something that's against the grain of everybody else. All right, so that's it for today. I have a recording out to you soon. Join me tomorrow, because we're going to build a system together that has a very high degree of back-tested returns. So guys, we'll see you tomorrow. Have a great afternoon. Till then, we'll talk soon. Bye now.